Hello everyone, my name is Ajinkya Nanshar Kumbar. I'm a student of MBA. This is my first YouTube video on modern approaches to financial management, financial decisions. So let's start. What is meant by financial management? Financial management is all about planning, organizing, directing, and controlling the economic pursuits such as acquisitions and utilization of capital of the firm. To put it in other words, it is applying general management standards to financial resources of the firm. Scope of financial management. To understand the financial management scope, first it is essential to understand the approaches that are divided into two sections. First scope is traditional approaches and second is modern approaches. First, we will discuss about traditional approaches to finance functions. During the 20th century, the traditional approaches was also known as corporate finance. These approaches was initiated to procure the manager fund for the company. Second approaches is modern approach to finance functions. With the technology improvement increases competitions and development of strong corporate, it was important for management to use the available finance resources in best possible way. Therefore, the traditional approaches become inefficient in growing business environment. The modern approaches had a more comprehensive analytical viewpoint with a focus on the procurement of funds and its active and optimism use. The fund agreement is an essential features of the entire finance functions. The main element of these approaches are an evaluations of alternative utilizations of fund capital budgeting, financial planning, assessment of financial statements of business success, determine of cost of capital, working capital management, management of income, etc. The three critical decisions taken under these approaches are: first one is investment decisions, second is financial decisions, and third one is dividend decisions. So here are the features of modern approaches. First is more emphasis of financial decisions. This approaches is more analytic and less descriptive, as the right decisions for the business can be taken only on the base of accounting and statistical data. Second feature is continuous functions. The modern approaches is an constant activity where the financial manager makes different financing decisions, unlike the traditional method. Third features of modern approach is broader view. It gives importance not only the optimized use of finance also, but funds procurement. Similarly, it also incorporate features related to the cost of capital, capital budgeting, and financial planning. And last features of modern approaches is the measures of performance. Performance of a firm is also affected by the financial decisions taken by the management or finance manager. Therefore, to maximize revenue, the modern approaches keeps a balance between liquidity and profitability. The other scope of financial management also includes the acquisitions of funds, gathering funds for the company from different resources, access and evaluations of financial planning and policies, allocations of funds, use of funds to buy fixed and current assets, appropriate of funds, dividing the distributions of profit, and the anticipations of funds along with estimation of financial needs of the company. So this is today's topic.